Hello friends, welcome back. We are going to review again the blue lights and today with the oscillations underneath those instruments. So we can pick a bunch of instruments. Let's do it quickly. One thing you notice that they look different. You're trying to, as I said, squeeze the ranges as much possible. 30-cent stop loss is much better than $1, for example. All we have done, you have taken the ATRs bars, and I can show you that. So this is the setting for all the instruments. Resolution, flex Rankos, ATR 14 on a minute bar because it doesn't matter because we're using the historical data to do the forecast and 24 hours. That's it. So nothing else has changed. Formulas are not changed. Nothing is changed. It gives us a little bit narrow range on these blue lines to help us with the stop losses become a little bit more narrow. All right, we can again, the logic is still the same on every instrument. All the things we have discussed remains the same. Below this short, above this longs, that is rule number 1. Market is here, it is below this, so our job is to find the best short entry, which happened at 926 area. Options are not open, but entry was perfect. Now if we add the oscillation context, which is right here, it is at the overbought. This one has, as I mentioned, lots of oscillators in one. No need 20 things to guide you. We have one composite to guide you, and right here. So this is a perfect trade, and the trade is not reversed at all. All right, next comes the target. Target 1, green line, target 2, this green line. If it doesn't go there, that's fine. My point is, we are looking at entries today. There are ways to precisely hit the targets just using these price levels. This was, I think, overnight announcement for the earnings. All right. On this day, now on days where the information is way too far away and you come to trade, there's no, our rule is pretty simple. Short below this and long above this. Rule number 1. That will never change. So if you want to take shorts only, get it, if it gets close to these bands, perfect. Sometimes it opens here and tries to get to the band, but it is looking at the last day's green contacts, which is okay. We have oscillators because this is short only again. Oscillator here. You can take shorts using options. Or you can put a buy order at 107.92 cross, and then you get this $2 move. Okay, let's check this guy. Same thing. Above this long, below this short. So we are in the long bias. So we are trying to chop off one direction. So that helps me focus on just picking up the best trades in a given direction I want to go, instead of just picking up and down and be chaotic in your trading. Obviously it cuts down the noise, and obviously you draw your trend lines and whatever technical analysis suits you. All right, now If I'm going long only, market is right here at 10:14 and 9:30. I'm going to take longs only. So I will wait for my oscillator to pull back. It pulled back into the previous day retest of the green. This green doesn't matter, but this is the channel it is trying to stay in. Looks like double bottom, triple bottom. It could have gone here perfectly, did not. You want to take a trade. This is where the oscillator is going to help you. Entry in the direction. So it will help you with the entry in the direction which is already biased long. So this is a entry. You can look at the oscillator. This is the entry. Now these are minute bars, and oscillations are right here. So if you have your option chart open with your bid and ask spreads in the trade grid, you can be ready to hit the bid or the ask depending on how much the spread is and how aggressive you are. So the point is we have a clean short entry. Right? Okay. How about this day? Well, intention is short only. So where do we go short? Now this green line is average of lots of oscillators. It is pinning down, squeeze down, crushing down. It has been crushed. There's a demise. What that means is when the pressure is released, shorts. First time it gets onto this. For example, here, look at this. The green is extremely on the high side. That means when the pressure is released on the bottom side, you just buy. So this is describing which side the pressure is on. This side the pressure is down on the downside. It is spending more time on the downside. So our job is to short the rallies. Here, short the rallies. So when it goes up, preferably close to this, an oscillator is there, and it is off by 45 cents. This is fine. You can take a shot. You can take a shot here. So this one helps you time your entries. Once the direction is picked, life becomes much easier. How about this one? Same thing, pullback, right? So the trend is pressurizing to the top side. It is biased to the top side. Pullbacks are happening, and this is where you enter or add to your positions. Now this model is never going to change for millions of years. It is generated directly by the data itself. As long as data is there, stock is there, it is never going to change, ever. All models are just built that way. If your math is correct, no need to change. So here we are on this day, bias is long. So let's do two more examples and keep this video short because we have covered this many times. So here, bias is long. So I need to get a best long entry, let it come down. So this is one entry. Other one is this entry in the bottom. Other one is this entry at the bottom. And we are only taking one-sided direction trade. It tells you where it wants to go. And this was early morning. There's no options. Stocks are there. You can play that game if you are into stocks, which may not be a bad idea actually. If you want to just play with 100 shares, you can have some few hundred shares, have some $300-400 buffered in before you take on the options. Okay, this day, obviously, you can see option is to trade shorts only. All right, so what we do, wait for this guy to show up some strength and sell all rallies. Now this pattern looks exactly like the pattern here. See this? And this is what we do to use AI to detect the shapes also. We do a shape matching, but that is for different day, but you can see that, right? So you be tempted to, pick the bottom or the high, but again, life becomes easier by removing 50% bias from the market. All right, this day market is long, is above this long. Here, this is. Let's talk about this, both of these, and what's going on. This is long only above this, short here. So when it is going long, 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 pull back. Stock 650. Moving averages, the green line, stuck on the top. Pressure is on the long bias. Release of pressure, pullbacks, enter long. Enter long, enter long, enter long. So it will be preferred, it will be happier moment if it came down here and there's bounce from there. Bias is there, which is fine. That's why we have oscillators. 10-15, we got a pullback. If you just do the measurement on your head, this is roughly 50% move pullback into the levels, which is fine. But our job is to look for entry. This is the area. Because strength is too strong, the way it moved very fast, this is where the rate of change comes into picture. How fast have you moved? And then the pullback will be expected to be, you can just see this, right? Fast move up, pullback 50. Fast move down, pullback 38%. Retest, support becomes resistance, right? Fast move up, pullback will be around 50. If you get lucky at 50. Alright, so got the trade. So now this day happens. Now this day, logic is always the same. 8 o'clock, 8 o'clock, 8 o'clock, 8 o'clock. Okay, so 9:30 is here. At 9:30 when the options were open, this is long only, so you're waiting for some. Now this is going to be a losing trade because we wanted to go long, it came down to a level, boom. So did not happen. Right? And if it closes below this, the context has changed to short. So this is where, when the market is shifting its bias, you will have losses which are very controllable. That's why we have very controlled loss. You can create a, as I said, you can create a buffer. I think in one of the videos we talked about it. If this is your height, you can create a height on the top as a stop loss and same height at the bottom for long stop loss. Oops. You have to strictly follow the rules. Market is not going here, it will be always here. So when we wanted to go long, we got stopped out. And we know we have to take a short. And we also want to know when to take short, and short has to be qualified by the oscillator. The short, you missed this whole short probably if you waited for this methodology. Then we are looking for a pullback right here. And then at 2 o'clock we got our trade. Options are pretty much less premiumed if depending on the day, and there we are. And obviously support flips on the other side. Support becomes resistance on the pivots. You can see this going on. Just a rough area. That's not our scenario we are talking about right now, but you got the idea. And then, if you look at this fast pace move down, if you do the retracements, it's hardly 30% because look at this moving average on the lower end. That means pressure is on the downside. Okay, let's do some other stock quickly, one example, and it makes sense. Let's do Tesla, a popular one. So, same idea. Short below this. So today, short below this 740. This was if you want to take a short on the stocks. Nice move. When the market opened at 10:13, same thing. Market went, rallied up around 62%. You can see roughly that is a roughly 62% retracement in the direction of the trend. And then shorts only to start with. So you have to, and then we have order flows, big levels, all these things. Big levels are all initiated from this. This is just a daily big levels. There are weekly and there are monthly big levels, which are even big daddies, which big banks are looking at, and this is what they're driving their business from, which get caught later on in the other softwares because they have to drive the value of their business from the value areas, not random. One day they decide, okay, let's take a shot here, a million shares or 10 million shares. No, they have a plan. And the plans are executed based on the market context and the profiling techniques. Alright, so here, short for this day. I got a short here, and then nothing is just creating a, it is creating a spiral energy for next blowout. Alright, this day, market opened 8:30, 8:30, 9:30, supposed to go long. Only you wait for then the context changed to go short. Now I'm waiting for it to go short. Now the context changed again. Unless you are, if you're trading in shares, 100 here or 500 here, right? Stop loss is here. Okay, no problem. Took a small loss, recovered the loss. Okay, then you took off. So the stop losses are here to protect you with this range. Again, what we do, take the box, go up, draw it properly. This is your range if you want to do that way with options. This was hard limit, get out no matter what. Otherwise, that means we're not understanding the market, or the model is not really giving us the good direction. So here short only, we had everything lined up together to short, and then it went long, and we were not in this trade because of we didn't get the oscillator. There may be other oscillators giving us pullback, but based on this methodology, and we got one short based on this oscillator. If you are just trying to go long and short based on this level alone on the break, which we have been discussing, so what we do, we take a short here, let it come back. Now this market may not be open for options, and it comes back here. You've taken your profits. You also know it's going to reverse. Get out, or let some going into break even or whatever, right? So let's say we shorted 1,000 shares. We take 80% profit, let two run for home run, and we expect it to be stopped out. So let it stop out. Stop and reverse will happen here. One tick above this. And this is where options can also be played, right? So this is where the long and short will work. This is how the things are designed to operate on. Not every day is going to be just clean and it'll just keep on going short here, short here, short here. Everything will become like miraculous, but That's how it is. Okay, this is where we add things, the beams, the endpoints, the targets. This is just discussing the entries only. If you look at the green level, we went to the green level. From last 2 days, 3 days, we have to track them. Green level went up, green level went down. But the entry alone, you will take a shot here, stopped out, reverse it because we are on the other side. Okay, same thing here, 935. Market wants to go long. If you're in this middle, it is deciding which direction they want to go. They have to have enough contracts to move the market. If the contracts are not enough in their pockets yet, they will collect them and then make the move. So here, if your stop loss is here, long is here, we did not get stop out, it came back to us a little bit and then we got long. So that day there was no short because it never went down. This was the entry for the long, this was another entry for the long based on the oscillators. This day was pretty clean. We were below this, we went to retest it, and then oscillator gave us an option to go short. And it's a 9:30 at the open. These are clean days. Not every day is clean day. This was clean enough. But you can see this is a doable, learnable approach where you don't have to keep shifting through different things. This is based on the bank's value scenarios. Here, short only because we opened here. Now this is trying to go up and up and up. So here, take one shot. I'll probably add more here. When you see this, now again you have your own oscillators, right? I'm just telling you how this one works. And if you see a lot of pressure like this, moving average is going on, let it settle down and then let this cross over. So at this point somewhere here you can short. Did we know it'll go here? Well, we don't know. We could, not by this simple approach which we are sharing. So okay, so I think that is that. How about what else is going on? Nvidia. Let's look at Nvidia. This day long only, so this was easier. This day long A only, pull back long only, easier. Okay, the long only, buy here, here, short only, short here, stopped out, again re-enter because we know this want to go down, and there we go. So the stops are, if you stop and lose one, you're always making 3 to 5 back. That's the whole game. And you can keep a buffer zone of absolute exit, which is, as I said, take this height which we are printing and put it here. You say, okay, I'm gonna go short. You took a shot and you're waiting for it to hit. If it hits here, get out. You have to get out, and then you re-enter. Now this oscillator wants to go down. You put a limit order here, and it take off. So now if you look at this, right, one loss recovered here. Now profit 1, profit 2, profit 3, profit 4, profit 1 to 5, 1 to 5, 1 to 3, 1 to 5. You guys already know all this. Nothing revolutionary. This day, shots, we took a shot. Attempt 1. Options are open here. Took a shot. You know it's gonna go down. It went against us. And it also stopped out because of our strict rules. This is the buffer. If it hits price, let's say, get out. You take 10%, 5%, whatever percent loss in the options, then you wait. Because we know it's going to go down because of the oscillator, but we have to wait for it to come down and close one few ticks below this, right? So entry will be here. So same thing. Stop loss recovered. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1 to 9. So you got the idea, right? This is how. And then again, shorts only. Short came here. Short came here. If you got one big move, $3 4 moves, you're good to go. This one long only. Market opened here. 8 o'clock was here for the stocks. 9 o'clock again, nothing going on. Some news probably at 2 o'clock. Still long here. So long here at 9:07. So that okay for options. Difficult situation for this day. There's nothing there going on for options until 3 o'clock. But the bias was long only. So I think this is how this is structured. Short only, short, short. Here, short only, short here, stop loss. Same pattern shows up, right? They try to flush you over. That's what they do. They are flushing people over in this value areas. All right, and then our intention is to go short. Let it prove itself. Go short, right? Same thing. Lose one and make 10. Patterns are showing up over and over. Sideways days are challenging, but we don't know which one is going to be sideways or not. One thing we know is we have ability to find those extreme edges